Hey, it's Mike. I'm not an investing guru. I'm an average guy sharing my investment journey on the internet. In today's video, we're talking about how much my 5,000 shares worth of XDTE paid me, as well as some stock commentary. This is my Robinhood account. My total Robinhood account is worth $258,666.33. I own 3 holdings in this account. I own Tesla, which I use my own money to purchase, and then I own XDTE, which is where I borrowed money to own this. This is the growth portion of my portfolio, and this is the income portion of my portfolio. The third thing that I own is the Tesla 450 call that expires in about 2 years. So I'm selling covered calls against my positions here. On this channel, we borrow money. And what we're trying to do is we are trying to enhance our gains. And this is where we can start getting creative with our different strategies of enhancing our gains to beat the S&P 500. So the S&P 500 is the market, and we want to beat that. In this brokerage account that I own, that's where I'm trying to get creative. I already own the 403B that has the S&P 500, the total international market. I own the SHG, my Roth. So this is where you can start getting real creative in enhancing your gains. So on this channel, I have what I call really good foundational holdings, and that's $385,000 worth. And then I borrow against those holdings. However, some of you may ask, is your portfolio is only worth $258,000. On here, it's worth $258,000. However, if you look at my actual Tesla position, it is really worth $385,000. So if you look over here, it's worth $385,000. And the reason that it is not showing that number right here is because I'm selling these covered calls. What Robinhood does is if you are selling covered calls, what they do is they take what it would take to close that position and they subtract it from the overall portfolio value. In that case, it would almost cost $130,000 to close out these positions. However, in the long run, what I plan to do is I plan on rolling these further and further if it's above the strike price. If it's below the strike price, then these will expire worthless. Going back to the strategy. So we're investing these foundational holdings and then we're borrowing money against those holdings. This is the equivalent of you buying a house and then using a home equity line of credit against that house to invest or use that money. So in these foundational holdings, I own Tesla. And to me, Tesla has the highest risk-adjusted return. This is where I use my own money. So this is where you're supposed to use your own money. This is where you're supposed to pick up the overtime shifts. This is where you're supposed to work hard. And you pick company or holdings or an ETF that you feel will grow over time. When you identify that, put your money in there, and then what you'll do is you borrow against that money. My plan to borrow against this money was to invest in this fund called XDTE. So what they do is they sell some that are covered calls on the S&P 500, and they sell calls against those. I initially started with $300,000, and now it is about $282,000. And the reason I'm doing that is I'm not reinvesting my distributions. I'm waiting for deals. Right now, the Shiller PE ratio, which some of you may not know, is the long-term valuation of the stock market. So what they do is they take their own proprietary formula and they put the valuations over a 10-year period. And right now, currently where we're at is the second time or the third time in history where it's been this high. My thought process is if we're hitting all-time highs, maybe it's probably not a good idea to keep reinvesting this money back into the market. Maybe it's a better idea to start paying down the margin so that if an opportunity does arise, then I can use that margin to purchase a holding. So I have a whole list of holdings that I kind of keep track of here. Anything that pops open over here that has a really good PE ratio and for whatever reason the market is not valuing it correctly, I will go ahead and pull the trigger and invest in something like that. I'm always looking for a great opportunity. However, I don't see any right now. So the best move for me is just to keep paying down this margin. This is my portfolio value. These are the holdings. Let's just look at the Tesla position. Over the years, I've been acquiring Tesla positions and I've used some creative ways to actually buy more shares of Tesla. Many, many years ago, if you look at my channel, I have put out 114 videos, and some in these really far out videos, I had some creative strategies about paying for my Tesla position. So the majority of my Tesla positions were actually bought from selling covered calls on NIO and then switching over selling covered calls on Tesla, predominantly built the bulk of this position, these 900 shares over here. And then because I have been investing in these income funds, investing in Tesla, the yieldmax families and AMZY, I was able to buy more shares of Tesla. I've been using margin to supplement income to purchase more shares. However, right now, I'm at the point where 900 shares of Tesla is plenty, and I'm just going to be holding this for the next 10, 15, 20 years, unless I get assigned on my calls. Portfolio value, $385,695. If you wanted to use margin, it is a 30% margin requirement. So instead of investing in income funds and you wanted to use margin to invest in actual stock holdings, it would be a 30% maintenance requirement. If you borrow $100,000 and you invested in Tesla, your margin maintenance will be $30,000. And that is about it for this Tesla position. Going to the XDTE position, this is the one that you guys care about. So I own 5,641 shares of XDTE. Total portfolio value is $385,000. My original investment was $300,000, and it says here I'm down 4.7%. However, when calculating the income with the actual distributions, my real total return is actually minus 0.8%. So since I have been investing in this fund since December 20th of 24, I got paid $12,000 in distributions. If you subtract this from this is your total return. It's minus 0.68%. So not too bad overall. Moving along, maintenance requirement, 25%. So again, if you borrow $100,000, you'll have a margin maintenance of $25,000. So if you scroll down, you can see here that this is my distribution. So on January 17th, 2025, because I own 5,641 shares, it paid me 36 cents a share. That is a whopping amount of money, $2,000, and I had to do absolutely nothing for that. That is fantastic. And then just to show you guys proof that I actually bought $300,000 worth of it, I know I did it in 3 tranches. So on December 18th, I bought 100,000, 100,000, 100,000, makes up $300,000. So that being said, you know, anytime these distributions are coming, we are just stacking cash. So let me just go to the dividends here, all the dividends. So we're just stacking cash. So $3,000, $3,000, $1,800, $1,000, $2,000. So we're just stacking this against our margin account. My total market value, so if you take the equity with the margin used, is about $500,000. And so my equity is about 48%, and then the margin's $281,000. Every single week that I get paid out the margin, I want to keep chipping away at this number. My ideal goal is to have a margin amount that is about half of what this number is. So realistically, if this is, let's just say 250, I really want my margin to be down to $125,000 before I can start using it for other means. But right now, because the market is overvalued, because that Shiller PE ratio is saying that the market is overvalued, I'm just setting aside more and more money. When I do find the right opportunity, I will use some margin to invest in it. But right now, I think the best use of my money is to just pay down this margin. You can see here the different positions that are open. And then my margin maintenance is $52,789. For some of you who don't know, my account would have to drop down to this value before I would get a margin call. That's a very low amount. That being said, we are staying the course. We are steady. We'll see what the markets are doing. President Trump is getting inaugurated tomorrow on MLK Day. We'll see what the markets do for the next 12 months. But besides that, that is exactly what I'm doing. Did not find any different type of investments to deploy my money. So right now we're just stacking away in the margin amount. We'll see what happens. Hopefully you enjoyed the video and hope you all have a good one.